There's been an interesting phenomena that we've been getting with all-time highs in the broader averages, and we're seeing it with the S&P. We've seen it already once, and we're seeing it with the NAS today. And what is that? Let's take a look at what this means for whether or not this is a prelude to lower lows, or should we just keep our perspective and listen to what the Federal Reserve told us yesterday, which is the Federal Reserve is going to keep their foot on the gas pedal in terms of printing. Monetary policy is going to remain quite accommodative, and that really does clear the path for higher highs in equity. So what gives, right? Okay, so take a look at the S&P. Higher high, got hit. Just closing right around the higher high, again, struggling. Today, we're selling off. And so the truth of the matter is the days of the market making a 52-week high or a significant new high or an all-time high and then just running from there, those seem to be behind us for now. The NAS is suffering something that we saw in the S&P. We had a midday all-time high and the S&P unceremoniously sold off. Well, we're seeing something very similar in the NQ, where we have a value area high and we have a Darvis resistance zone that just continues to keep prices in check, and yet we have an uptrend by way of the double green 8, 13, 21, 34. So I'm not panicking here. This just shows that the trend is still intact. It's just that the momentum and those buyers that have been willing to be long through all-time, new month, new highs, right, or just aren't showing up. So that's going to really put the pressure on the dip buyers, because there's two groups always at work in an uptrend. Folks who are willing to buy the new high, higher high, higher high, higher high, or as they say, the buy high, sell higher crowd, or the dip buyers. So since the buy high, sell higher crowd, the momentum traders really aren't showing up in droves, as they tend to want to at especially all-time highs, then the dip buyers are going to be responsible for holding this market up. Okay, so there's always two groups here. All is not lost. And please, let's just remember, this is not a broad-based sell-off. So let's talk about some of the things that Powell talked about. The only thing that Powell did not give us were his S&P targets. I mean, that was a very clear message to the market in terms of the support they're going to continue to give equities by way of their monetary policy. All right. Now, the other thing that we want to keep in mind is, and I think this is really important, is that this is not a broad-based sell-off. What do I mean by that? What do I mean by saying this is not a broad-based, because it sure feels like it, right? Based sell-off. Well, let's talk about the flip side of high concentration weighting, shall we? Within the NASDAQ is the XLK, by way of heavily weighted sectors, the XLC, and the XLY. That's your tech, communications, and consumer discretionary, all of which are, for the most part, still intact uptrends. XLC, which is Facebook and Google, gapped higher and for the most part has maintained the strength. XLK is really the culprit. Take a look at the down move in XLK today, and that is Apple and Microsoft. Apple and Microsoft really are unique to the broader averages, Dow, S&P, NAS, because they're heavily weighted in all three. There's no other stock that really has that kind of exposure to the broader indices like Apple does and Microsoft does. So then we ask ourselves, well, Rag, how do we know this is not a broad-based sell-off? Look at the gap higher and the maintaining of a up candle on XLF. Financials are fine. XLE, gap up, trying to close the gap, but again, holding on to the move higher. What about something like, let's take a look at the XLI. XLI is not in meltdown mode. This is industrials, the way tech is. How about transports? Transports, again, we're not seeing a candle that looks like this. That's the QQQ. Or again, this, the XLK. This is tech-led, and the danger in tech weakening is akin to what we saw at the end of February. Tech is unique in terms of its exposure across all three major averages. Transports, industrials, it's pretty much a Dow phenomena, right? You take a look at financials and healthcare, that's mostly Dow S&P. So it doesn't affect the NASDAQ, but the NASDAQ can affect everything else. And that's really what we're seeing, not broad-based. Now, I'm not going to blame the ZB because we do have stocks and sectors that are up today. This isn't, again, when I say broad-based, that means we're seeing sell-offs across all the major heavily weighted sectors. Well, again, financials are up, communications are holding, and energies are holding as well, pretty well. So I can't call it broad-based, and I certainly can't call it the fault of the bond market, because take a look at the ZB. Yeah, it was down, but it's already coming off its lows. So I can't blame this on yields alone. So be careful identifying what you think is actually plaguing the market, when in reality, I think all the market needs to do is just keep an eye on Apple and keep an eye on Microsoft for when the buyers inevitably will come back. And perhaps also keeping a close eye on Amazon is that we have earnings. And that could be definitely a reason for people to start getting bullish again on Apple and Microsoft. As far as I'm concerned, Apple and Microsoft could be setting up some wonderful buying opportunities, because if the tide starts getting lifted again, meaning the broader averages are moving higher, yes, Apple and Microsoft should be participating, but they're going to have to participate when the markets start moving higher. Amazon could be a big factor for that, as could people like myself going and blue light special shopping these two stocks. All right, so keep that in mind. Who's driving us lower? This is not broad-based. I cannot pin this on the 10-year and the 30-year because they're already coming off their lows. And the equity markets are still heading lower. And they're still heading lower as Apple and Microsoft are. And I'm giving you these charts midday right now. Both of these are plotting very heavy candles pressing at their lows. Watch the XLK. That's going to give you insight into when this market broadly starts to turn around.
Without simpler trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency.
It's one of the things that won me